Hello, 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 everybody. How is everyone doing today? Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who's not here today. It's just me. It's just me. Hello, 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 Amit. Hello, Raj, George, Patrick. Let me just get through the hellos, and I'll get back to questions. Hello, Connor. Nice and easy to the upside today. It was a nice strong trend day. If you followed the rotation zone concept and watched the VIX and the breakdown and then everything else. Well, super low volume. Oh my god, there were no sellers out there today. Rip your face off short rally, short covering rally today. There was literally no sellers, and the breadth was horrible and the volume was abysmal. There'll be a good opportunity setting up for a short. This is why you don't want to stand in front of things. You want to wait for the topping patterns. Oh. When looking at the SPX from June low to August high, we literally pulled back to 625 level, then it bounced based on probabilities. It usually bounce and retest for a possible break. Oh, it depends. In this kind of market, I'm expecting a retest and a break. So what else did you say on it? One thing I've noticed when looking at the weekly indices is the price range for each candle is quite wide. Crazy volatility in 2022. Yes, there are some great volatilities. Also, this volatility collapse in the VIX is wonderful if you're looking to establish, especially some longer term put positions or hedges to the downside. This is fantastic. The market's not pricing in anything whatsoever bad news. Any bad news. They're not pricing in stuff from the election in November. They're not pricing in even the next rate hike and it's not priced in. Boy, and then you get the absolute crap rally. That's one of the things when you start seeing rallies like this, and I'm saying it's a bear market. I mean, it's technically the definition of a bear market, and we are still in a bear market. Just glance at stuff like ARC stuff. Glance at BBBY. Glance at AMC. Glance at the meme stocks. If they are just doing rip your face off rallies, don't stand in front of it. Just go with it. Because those are the kind of rallies you're getting. It's fascinating. I mean, the new, I started talking about it this morning and I've had more moronic conversations today. We're at 50 basis points as a new pivot. The Fed's going to also announce they're going to raise inflation expectations to 3% from 2%, even though we've had multiple Fed speakers today saying, again, they're not even going to see 2% until 2024. They're not going to 3%. Boy, if they did that, just watch out below. They might as well cancel QE and just say, hey, we're just going to cut rates. Because you just got to have inflation entrenched, and then they're never going to get ahead of it, and their price stability is out the window. But the market's ignoring all that, even though they keep reiterating it. This is funny because the more the market rallies, the easier it is to go, all right, let's slam in another 75. Then let's follow it with a 50. Then let's follow it with a 25. Remember, you want my thoughts on stuff? The thoughts are people are morons. Here's the deal. You got another rate hike coming up the 21st. You got CPI numbers, but even that was said. Hey, it's not going to even be dependent on next week's CPI numbers. And you got 90% now of the 75 basis points. Yeah, this could, if CPI numbers come in really weak, it could go back down closer to that 50 basis points. But they keep saying we're going to try to hit that 375 to 4 overall base, 375 to 400 overall basis points by early next year. Well, early next year, let's take a look at they're spelling this out. Now, again, we have to make the devil's in the details of what they actually do, but they'd be again, as Bob said, if they don't go 75 basis points, they'd be pretty much the dovish central bank, even more dovish now than the ECB. We got September, November, December. Then you don't have one till February, essentially right before the Super Bowl. So if they want early next year to get to that rate, if they only do 50, all right, that takes it to, three. What does that take it to? 275 to 3, and they want to get 375 to 4 early next year. They'd be doing 50, 50, 50 maybe. At least. I think that 75, you might have a little descent in there, but I don't see him getting that dovish. And if you do go, and what Goldman, they're expecting 75, 50, 25. So that's a 150 basis point hike still before year end, and the market's just shrugging everything off. You can see the heat map today again. Mega caps just leading the rally up. Even oil, it was just nowhere to hide if you were a bear today. Again, we got the buy signal. Does every buy signal work? No, the odds are above 70% though. You had multiple of the Fed speakies. We'll go through next week, but just remember, I just want to point it out now. CPI is on Tuesday, so don't forget about that. Where did we end the day? Real quick, we ended at 40.83. You're almost back to neutral gamma, so any further rallies to here goes into positive gamma, which is a dampening effect. So we're getting to some of that key levels, remember. So, and you don't have, this is going to still be the big magnet. This is going to be a huge, this is like the biggest OpEx since in the last couple years coming up. Keep that in mind too. You don't got a lot of gamma up here. You got this tractor beam to 4K. So don't get caught off guard with that. Here's what I'm talking about also, and I'll get to some more comments, questions. Let's just take a look at the volume. Look at this. Look at the volume. This is pathetic. This is pathetic compared to you watch. Remember, volume generally follows trend. Look at your downtrend days, high volume. Look at this. Even your choppier day being yesterday still had halfway decent volume because you had back and forth trading. Remember, it was choppy with an up bias. Today was just a strong update. There was no selling. It was just, oh, let's just buy the crap. So if you weren't buying the short squeeze or anything else, if you were trying to sell in front of this, you were just hit. You had a death wish. NASDAQ, this. Look at the NASDAQ. Look at the NASDAQ volume. I mean, it's like, am I going to sell it? So fine, fantastic, setting up for a continued another rollover play. Look at the Dow volume. Look at even the last 3 days of the Dow volume. Sell-off volume, buy volume. At least a Russell. Russell was halfway decent. So, just wanted to point that out. Can this happen? And no, and I'm not upset it rallied because we got a nice little buy signal. So you can buy the dip. You just don't want to get married to the dip because then you're the dip. We'll do some more analysis on Sunday. We're approaching, now that we're above the daily rotation zone, I'm now really focused on this. Let me mark off my levels. We hit my key was at 40.93 today. We hit 40.95. I pointed that out this morning on the next key level. Beyond that, we have this now. Eventually, once we get the rollover, there'll be the nice magnet gap play. Where in my next key area I'm watching for to roll over is 4105 to 4130 early next week. You got daily cycles pushing in on the top. You're getting closer to overbought. 4 hour. Remember, we had this oversold, and now we're just back to overbought, just now getting overextended from the rotation zone. We'll go through those levels on Sunday. But that's all I really want to say. Let's take a look. The dollar index. And everybody's saying, oh, it's a rotation dollar weakness. This dollar, yeah, we had a nice 3-day pullback. This is not a lot of dollar weakness. It's actually closed. Look at the prior breakout zone. Closing right at it after dipping in the rotation zone. This is just an orderly dollar pullback. Setting up, now you get a close on Monday above today. It's a nice rotation and a percent beat buy. Cycles are finally getting back to the bottom. So would I front run it? No, but I will start watching for that. VIX, again, breaking down below here, breaking down from the low of September. So this is, by the way, this is not a double top. It's a multi-triple top. So the technical target for this, which I'll be watching for on any follow through on Monday, is about 22. Crude, back to the breakdown zone, weekly rotation zone. So cycles are starting to turn up. Yes, this was an aggressive buy, but it moved so far yet to just play it on the break, and I would not play this on the closing price. It would a break move. We can still see a little more upside, but again, I'm targeting roughly 88.70 to 89, low 89s. Let me just get through some stuff. Bitcoin, again, this should tell you everything. The rip your face off junk rally. So my targets are 21,885 to 22,706. Remember, we came down to 87.5% and held there. So we actually statistically matched the probabilities, which with that close below 62.5, I already took off those levels. Now watching for the next rollover play. Tesla, yesterday we triggered that double. Today we completed it. So actually 2 days ago we triggered the double. Sorry, yesterday gave you the pullback, easy pullback entry. Today completed it. By the way, that also took out the double bottom. Invalidated that. So let's see. Where are we? CPI, then a higher high. We shall see about that. Good evening, Anissa. I had an earful about pricing in. What do you mean when you use the term priced in? Are you asking me? I don't. Bank of America warning that a real risk to financial markets is some potential liquidity that may appear in the U.S. Treasuries market. Can you expound a little on that? May appear in the Treasury markets. I mean, we're getting some based off just the Fed and everything else is going on, and rolling off the balance sheets, and with the stronger dollar, you have foreign holdings are having to sell more into the Treasury market, and there's been a reduction in buyers, so the liquidity is getting tighter. I don't think we're going to have major illiquidity in the overall broad treasuries. Yeah, there's still, I'm not seeing major. It's more so in some of the other credit markets that are starting to point to some liquidity issues versus the broad liquidity of broad treasuries. Huge inverse head and shoulders on Apple weekly chart. Let's take a look at that. Why can't I? AAPL. Huge inverse head and shoulders on the Apple weekly. No, it's not. Nope. This would not qualify. Does anybody know, even if this shoulder plays out, why this would not qualify as an inverse head and shoulders? I've covered this before. I'll cover it again. All right, if you said shoulder, head, let's say it rotates up, shoulder. Why is this not an inverse head and shoulders? Then Jim Mayuriel posted a chart today from the Bloomberg terminal today showing that Q2 household net worth dropped $6 trillion. Yeah, I did see that, and you're going to see a lot more issue. It's all being shrugged off. Earnings compression being shrugged off. That's why you got to love this rally, because this rally allows repositioning of short positions. Hey, Daniel. Yes, it's correct, Sterling. It's not a reversal pattern. Inverse head and shoulders has to reverse a move. What is this reversing? It's not. That's where a lot of people have technical analysis completely wrong. By the way, if it's not reversing a pattern, the targets don't hold up at all, period. And the predictability does not hold up. If this were to rally up, it would just be a breakout play. It would not be an inverse head and shoulders. You can't measure from the head to the neckline and then project it. The predictability is completely off. Okay, just as a head and shoulders has to be reversing an up move, an inverse has to be reversing a down move. There is no down move, and the inverse head and shoulders can't be the down move. This is the down move. You don't, if in order for it to be inverse, you'd have to come down from up here. You'd have to come down from up here. And genomic stock got it also. It's not reversing a move. So, and this is where when you see, this is traditional. I mean, we do it our own way from all our testing, but this is simple traditional technical analysis. Okay, and there are so many people out there that spot the patterns. Like people will say, they'll say, "Oh, this is a double top. It's a continuation move." People just get this. They haven't even studied this stuff. It's like they're using the YouTube guide to technical analysis. Why am I extremely bearish? Long term? Fundamentally or technically? Because again, we're in technical sell signals, and fundamentally, we're nowhere near fundamental correction. Short term, I announced, I told you, I even said it before it triggered. I said this before it triggered. I even went through how to play it. I went through how to play it back on September 6th. If we get a break above Monday's high or Tuesday's high, and then it sustains into the close, it's a buy signal. This is a short-term buy. I said we were at cycle bottoms coming off of oversold conditions. I've been bullish for this week. His options 22 in here. He reached out to me yesterday. I don't think he's in here. But, you know, because he had a short position on, and he's like, and I said, I don't have a topping pattern. Statistically, we favor a continued up move. And we got the continued up move. Do I have a topping pattern yet? Let's see. Do you see a topping pattern here? Do I see a great topping pattern? No, this is just a pullback so far on a 15-minute chart. 1 hour. You see a topping pattern here? The only thing I see is some waning momentum. Do I see a topping pattern here? No, we're overbought. Will I be watching for a topping pattern? Yes. Have we hit the 50% now since we took out the next targets? I'm keying in off the 50% rally level to watch for a topping pattern. We have a key trend line. We have the 50% level. We have the major breakdown level from, and then we triggered it on Jackson Hole. Now, long term, why am I bearish? Because I have very reputable sell signals that are in place for long term bearish. We've also had the yield curve inversion, which is a very reliable indicator for a recession. And I've talked about this based off of research. As you go back to zero and start accelerating above zero with the yield curve, the market generally starts suffering the big sell-offs. I've mentioned that. So why am I overall bearish? Because unless everything throws at the window. Now, if you have Fed saying, hey, we're stopping, we're going back to quantitative easing, we're going to cut rates, yeah, everything will go out the window. Other than that, that's why, Coco. Does that mean we can't participate in a short-term rally? Hey, I was just talking options. Did I not say yesterday to you that I didn't have a topping pattern yet, and probability is still favored and to the upside until we get a topping pattern? Did I not say that? And we got the continued rally. I'm tired of people always. You got to trade both sides. We'll get a topping pattern, then I'll be watching for the trigger in the next rollover play. And as I said, anybody who's longer term bearish, you can put on some amazing positions for even beyond November, like November expiration, at insanely low volatility for what I think is going to happen. I'm not giving you trading advice. This is a gift if you're long term or volatility wise, because you could even put on volatility plays going into November election, going into October, which is traditionally September's the worst performing month historically. October's one of the most volatile months. Look at what volatility is doing going into October. And we have a critical election coming up in November. This, even if you're not bearish, you should be interested in volatility plays longer term. I have no, this is why my fuse is about this long right now with people. They don't listen. See, I did. I said I'm not. Hey, if I told options, hey, we had a massive top position go short. Now, I'm not telling him how to trade. I'm not telling anybody how to trade. You are all big boys and big girls, and you'll come up with your own trades. I'm trying to show you probabilities and mindsets and, how to analyze the market. And options went long. I did not tell him to go long. He's got his own trading account, and he's managing his longs now. I don't know if he's still long through today, but if he was long, he probably made some decent money. And when we get another top, we're going into a potential topping area. Hopefully you'll watch the replay options 22, where we're going into a topping area. But again, I don't have a short signal yet. I don't even have a potential short signal yet. So what's the trade at this point? I wouldn't be chasing it long. I wouldn't be over aggressively getting long like Sunday night, Monday morning, but I'd be managing along at this point. So that's I'm sorry. September. I'm giving you historical information. September historically is the worst month of. Does that mean every September is the worst month? No. Okay? We are only 9 days into September. We were in oversold condition. Look, I don't know what to say. This is tactile trading. There'll be longs, there'll be shorts. Long term, you can have a directional bias because that's a healthy to have like when we're in full bullish mode. Long term will be, hey, we're sustaining a pullback. We'll watch for a long term or a short term entry signal when we're in long term bullish mode. And at some point, we'll be in long term bullish mode. Until then, we're in long-term, or at least I am in long-term bearish mode. I could care less what anybody else is. And meantime, it's tactical trading. Why? Because bear markets are notoriously hard to trade because you have the upward bias. And you'll know when I'm repeating myself, but once we stop hearing this mantra of the Fed's going to pivot every friggin' rally, and you get idiocy like BBBY. This company next year, reorganization / bankruptcy, up 8%. Well, how much is this up off the last this week? Which is fine. It can trade. It's, again, getting squeezed by the Reddit idiots. But you get stuff like this. You get AMC. You get ARC. And every time it's different. Whenever you get the rally, everybody's beating the drum. Fed's going to pivot. Fed's going to pivot. They're going to change inflation. They're going to do this. They're going to go to 3% inflation. Well, the 50 basis points is the new pivot. It's once we stop hearing this stuff, we'll be closer to a bottom. Everybody still wants to buy the market, and I also everybody's so bearish. I'm not seeing everybody so bearish. I'm actually seeing most people still from the retail side insanely bullish. I'm even seeing most of the idiot traders on Wall Street who've been trading since 2010 don't believe the Fed's just going to keep pumping in liquidity. They're part of the camp too. It's the old boys. And just for clarification, we're still in rally mode. And I talked about that this morning. If it continues higher, let's say it continues higher and closes next week above 41.69. Guess what? We're going to stay in rally mode. We're going to stay in rally mode and look where the next major target would be, the 87.5, 42.72 with the 200. Has it closed above that level yet? No. Could it rotate back over in this area? Yes. Does that mean we magically get short in this area? No, not unless we have a topping signal. I don't know how to make this any clearer to people. And I'm not necessarily talking to the people in the live stream right now. I'm trying to, there's lots of people watch this on demand because they can't attend the live streams. At least have a roadmap. Here's the roadmap. Buy signal. Go back and watch. I went through the exact way to play it on Tuesday or before it triggered. It triggered. Continue. Buy. I even showed where the stops could be aggressive and conservative. Conservative would be below the lows on a closing basis. Aggressive would be the 62.5 retracement of this bar on a closing basis. It did not trigger. Yesterday was choppy to bullish. Why was it choppy? Because you had a back and forth day, which, choppy. And why was it bullish? Because it closed higher. Then we gapped up. We gapped up on an open, which gives us a great, fantastic gap play when this rolls over again. Until then, what's the next targets? Well, I listed them out today. First, it was the side of the rotation zone. Then the 37.5. Those could be used to raise stops. Then I had this line on. You can go back this morning. 40.93.75. Same line as this morning. What did we hit? 40.95. Either take some profits end of day Friday or raise a stop again if you wanted to carry. What's the next stop raise? 41.05. We already 50 technically. What's the next level beyond there? 41.30. What's the next level beyond there? 41.61. We already got a map out. What do? If it depends on how you're trading the position, how much you're long, where you're going to unwind. I can't tell you. People are different. There's no one set way to manage a position. What I do recommend is when you hit targets, you either take some profits off or you at least raise a stop. And you don't take profits off at every target. You take profits off at the key targets. Other than those, at the more minor targets, you use them to raise a stop. But you already have a roadmap. And let's say you keep raising your stop and take some off. You get a close above the 62.5. What can you do? You can even add some back. Let's say we get a close above here, get a little pullback. Well, what would that be? That would be for a continued rally. Is it guaranteed? No, but we'd have the next major target area. Next minor would be the 75. The next major would be not only the 87.5, but the 200. So you manage out your position then. If you're already long, then you're going to use those levels to raise stops again. And you could potentially add back to your core position. If we get a major topping pattern in here and it triggers, then what do? We can unwind the rest of our long position and reestablish a short position. There you go. Don't know how to make it simpler than that. this is what I'm trying to get through. You don't have to make, yes, trading is challenging because there's fear of loss. There's fear of missing out. There's the ego wanting to, there's two different things I want to go on. I guess this is just going to be a Mike Rant teaching session now. There's another fundamental problem that's very difficult in trading. The ego self in everybody wants to be right more so than it's ingrained to make money. What do I mean by that? It would rather have its prediction, oh, I was right to say buy, rather than how to manage a position to make money. They're very different things. Okay? So you got to learn that. It's why a lot of traders don't do well and end up failing, because they'd rather be right than making money. They'd rather try to call every bottom, sell every top, which in the long run is going to lose you money, rather than taking the chunk out of the middle. And when the probabilities change, you change with the probabilities. Look, we had, fine, a double top pattern in Tesla, triggered. You got a double bottom pattern. You got to respect it. Hit the target. What does that mean? Does it mean it was wrong? No, it means it was one of the 30% of the double tops that don't work. It was one of the over 70% of the double bottoms that do work. When things shift, you got to shift with it. You take a loss, you unwind a position, and you go with the new probabilities. It's not about, oh, wait, should I have sat here? Oh, wait, guys, ignore. Did I say ignore the double bottom because we already had a double top trigger? I did not say ignore it. I said it triggered. And I gave the levels. And I also said how the intermediate level also for a stop reduction was the 200 because it was in the middle of the second and third target. You don't always know, but for the people, it would be stupid of me to say, oh, look, and overall, I'm long-term bearish on this stock, but you had a buy signal. What am I supposed to do? Just say, oh, screw it. Let's just add to the shorts on that. There you go. Legion Reaver, how do you go about drawing your trend lines? I've seen you draw lots of harmonics, but it doesn't mean trend lines. Legion, I have a 3-part video for free. It's a condensed version of stuff I teach, but it teaches an initiating point, a defining point. It's free on the YouTube channel. There's 3 videos. Please search for it. Just search for trend lines. You'll find it. If anybody can search for that during this and put in the link for Legion or let him know, please, because I've put that up there for free. It's more limited than what I teach, but it's exactly a condensed version. Please don't get sidetracked from some of this. But I'm passionate about the markets, and I'm trying to explain to people. And sometimes this helps people. In case anyone cares, Greece warned allies today that they may be getting ready to get into a Ukraine-type war situation with Turkey soon. Fantastic. Sterling, the bearer of great news. Can we stop with all the wars? Do we really need... Hey, Amit, big shout out everyone. Amit, I'm just catching up now on comments. I was not ignoring anybody. Amit with a huge super chat. Thank you so much, Amit. A wonderful supporter of this channel. Everybody who's in here live, please acknowledge Amit, because this is the kind of stuff that keeps it free for everyone. George already did. Way to go, Amit. Tired of seeing Mike get worked up on all these distractions. Hey, my worked up helps, I think, sometimes. Rally mode from Nas Industries. Again, Anissa, thank you for shouting out Amit. Thank you again for being a great person. Amit, great. Let's give shout outs to Amit. Amit's the big hero today. It took me a few months to understand rotation zones. Some are just slower than others. I'm slow, but I do learn. You, trust me, hey, it took me a long time to get concepts. But once you get it, that's why we're here every day. Took me months to rewatch the videos in the how-to series and rewatching the live streams to get feel and competency. It's all about the probabilities, not hope, or I think this, just probabilities. That's right. You put the probabilities in your favor, and the probabilities doesn't mean you're always going to be right. But it's not about you being right. It just means that was the one of the probabilities that didn't work. Otherwise, you wouldn't have probabilities, would you? I'm trying to control. It's that's the big battle in trading. The ego self. Ego gets the best of us. Number one thing I tell all our team members and associates, just to set goal and stick the plan to get there. And the ego is not, again, being right is not even about, a lot of people would rather be right in business than necessarily do the right thing. They'd rather be right. How many people have you seen in business? And I've been a chief technology officer in business. Okay? You can't, you know what, when things change, I've had development firms that were just pooping the bed, shall we say. And it's like, I wanted to stick with, but I'm like looking at the results saying, we've committed to this, but we need to shift course because this is not going to work for what we need development-wise. This is taking us down the wrong course. They're not developing what they said. You know what? We're going to have to make a painful decision, take a loss, and shift directions and make some tough calls. If my ego is like, oh, wait, I've signed up for this. I can't shift direction because it will make me look bad in front of the board or in front of the CEO or this or that. Then I'd be letting the ego dictate the business decisions, not what the facts are. And then I'd be making myself trying to look good, trying to say, hey, look, we're going to stick to this and then blame other things for when it doesn't work. Instead of saying, hey, you know what? Things shifted. We got to take into account the current information, and if it's telling us something different, we have to shift course. Don't get married to a position. Don't get married to a mindset. Because if you get new information, just like, all right, let me roll this and I'll get to some other comments. Remember our key levels? Remember this? Remember this? Hey, between the 50 and the 62.5, there's still the red lines are here. The red lines are here. Watch for a rollover. What did I even say? You get a close above the 62.5 level. What would then I have to start targeting? A return to the high areas. Did we? No. But that's why the lines are on the chart, because if that happened, longer term stuff would have to shift. Or at least medium term stuff would have to shift. I always appreciate you call balls and strikes not what you want the pitch to be. Yeah. That's a good way to put it, Ted. You got to call the balls and the strikes, not what you wanted it to be. If an umpire is rooting for one team to win, you think he can call the plays objectively? Really? Because you're going to view it through that glasses. You know, your strike zone for one team could become very small and for the other could become very big. But that's going to bear out with the replays and everything else. People are going to start going, what is his strike zone doing? It's all over the place. And I've seen some really bad umpires where, you know, it is like, okay, what game are you calling? But overall, you can't be, if you're an umpire rooting for a team, you're not going to be a really good umpire. And you're not going to be long in the majors because your crap will stink. Let's see, options 22. Crazy rodeo, ride the bucking bear with puts and calls. Don't fall in love or get married to stocks or in one direction. Have a neutral mindset and wait for the patterns. Yes, that's exactly right. And I know you've tried to front run things, options 22, and how has that worked out? Because you're trying to say, oh, it hasn't triggered yet, but man, it's there. But you know what? That's why you got to wait for a trigger. It's why I say there's a potential. We remember double patterns. What do you have? You have a potential. You have a confirmed, and you have a triggered. Potential could just disappear. All right? Potential's just, it's a potential. It's like Humpty Dumpty sitting on top of the wall. There's a potential he could fall, but what if he doesn't fall? He never fell. So don't be a Humpty Dumpty. Don't be a Humpty Dumpty. There's the new... How's Nat Gas doing? Nat Gas is not doing anything. It hit the targets on the short-term sell. So far moving sideways. What kind of correction is this? Remember, there's two kinds of corrections. What kind of correction is this so far? It's a sideways correction letting the rotation zone catch up. So if we start breaking down, we already have our longer-term potential sell in place. This is a potential. It's not even confirmed yet or triggered. It could disappear. Do we get short here just because we have a potential? No. The short trade is not triggered yet. The other short trade triggered and is done. This is a potential. It's a sideways correction so far. What will we watch? We watch, so far the 4-hour rotation zones come down and we didn't get a breakdown, excuse me. So now I'm watching for this daily. We have overhead resistance also with the hooking 50. If this doesn't trigger and we rally back up, then it's off the table. I've managed my expectations so well, I no longer have any. You no longer have any expectations or no longer have any ego. I know many people here appreciate what you do every day, morning, midday, evening, weekends, and sector overviews. Royale, this is much appreciated. And thank you, Amit. Thank you, Nas Industry, and I hope you're a subscriber too. I know many people here are. I hope we get some more. We're closing in on 5,500 now. Thank you for being here, Coco. The best thing I got this morning from the SPX Daily is the 50 to 62.5 zone is likely for a rollover. Took some SPXL off at the table at 50%. So you used a target and you took something off. And that's part of the thing. And you know we have a potential rollover. Do we have to get the rollover? No. But you can say, hey, we're in that zone. I'm going to manage my potential by taking something off the table. And then once we get the confirmed rollover, I could always take the rest off. If we might not get the confirmed rollover. Can I speak on probabilities on price action bouncing from the 62.5 and possible retest? Bouncing pretty much, the only studies I've done is if we don't close below it or above it on a rally, we maintain whatever probabilities we had from the longer term probabilities in place. If we close, like let's say so to give the S&P, we have not closed below that 62.5, so still the probabilities are in place from my stuff from my longer term patterns or my midterm patterns. We already did hit, we completed the head and shoulder pattern, so that midterm pattern is off. Once we close below the 62.5, then the probabilities will shift back to low. Other than that, the probabilities are for the next longer term pattern to still be in play. That's the best way I can put it. If you have no longer term patterns, then the patterns revert to any short term probabilities, like the short term probabilities based off a buy signal triggering. So it held this 62.5. It triggered a buy signal. So your current probabilities would be the probabilities on, for me, this percent B buy signal, which is a 2 to 3 day follow through, probability wise. 1, 2, 3. Could it go 4? Yeah. Could it? Now, in an uptrend, it generally goes into longer probabilities. In a downtrend, it's generally the shorter probabilities, or the shorter rallies, I should say. Yeah, options 22. Lost a lot on potential. You know, you can have a potential business deal that never works out. Hey, it's a potential. We're talking to them about a business deal. Until it's signed, it's a potential. Doesn't ever have to be. If you spend the money, if your company spends the money before the deal's signed, you know, that's not a good strategy. Because if the deal never gets signed, not good. You can't do you can position stuff based off potentials, but to execute stuff off of potentials gets very risky, both in trading and in business. Again, don't count your chickens before you're hatched. Remember, you can have a bunch of eggs in your chicken coop. Let's say you're raising chickens and not raising them for eggs. What if none of them hatch because something happens? Well, you had potential for chickens, but you never got any chickens. So if you already sold all those chickens, you now are in a rough position, aren't you? I had potential for chickens. I got no chickens. What do? I sold the chickens. Jeez, now I have add Humpty Dumpty and the King's Men to the warm, hot, cold porridge. At least that's the level I understand. See, we got warm, hot, the porridge analogy. We got Humpty Dumpty. What other nursery rhymes can I bring in here? Next time we get a sell signal, I'll do London bridges falling down. There we go. Lulu looks strong top to me. But wait, interesting with Lulu. It looks like look, what have we rallied back to? Then I had the earnings, rip your face off rally. Could have closed above the 62.5 today? No. And this is key resistance. So I'm watching for a short-term top. We got a gap fill there, and I'm watching for a return to retest this 50% area. I did not actually check it on the... Actually was looking at that. This is just a sideways little breakdown, but that's just a minor correction. More so I'm watching for this little minor gap fill and for a more significant topping pattern coming in. But if the market starts rolling over, this will be out of majorly overbought cycles at the top and now starting to roll over. So the short-term play is for the downside. Once we close, if this does close above the 62.5, then you gotta respect the longer term probabilities to the upside. So this would, at this point, would still only be a short term play to me until I see the longer term, or at least the pullback to key support in the daily rotation zone. But I'll let people in the live stream. Is anybody gambling here? I hope not. I don't think trading is gambling or investing. Gambling is just throwing your money at something and hoping. Or getting a hot stock tip off of Reddit. Or playing some of these pump and dump schemes. That's gambling. Netflix. There's nothing going on in Netflix to me. Still. The only thing is if the rally continues. See, even with this rally, this has been pretty weak, but the only next thing is for the upside gap fill. on any rally. Key support is coming back on this downside gap fill, but you start getting a key close back below 227.45. I'd watch 40 pullback to retest support. Other than that, it's just short-term plays. There's no fantastic long-term thing just yet here. It's trying to put in a longer-term base. Keep in mind, this is a very sloppy on the bigger time frame. Now this is this is a, come on mouse, don't fail me now. This is a very sloppy head and shoulders potential top. So if you start breaking down, I'm not going to map it out right now. You guys can map this out. Below this area right there, I'd start watching, and you're go trading into nearly an advanced clear path. So that's the only breakdown play. Then that's the only thing I'd be considering from the short side at that point if that does trigger. And it's sloppy, but I'm just going to map it out from here at this point. It's just reversing this move. Other than that, I'd have to play on a break next week. I'd be playing for the short-term gap fill. Just keep in mind this is going to, if the broad market, once it starts rolling over, this will beware of the downside on that. Hey Mike, the link in the description below the video for how I set up my charts doesn't work. Huh. I'll have to check that. Z-scaler and ZS has been on the rip your face off rally. ZS, I'm actually starting to watch for another rollover play in ZS with the gap fill play. If we do continue, the next key area I'm watching, again, there's no top pattern just yet. So there's no short just yet. The next upside play, especially if you can get the break early next week above 189, would be 205.56, and then would not ignore the 200 coming in at 212.50. But overall, once this thing rolls over and sets up a topping play, I'm watching for the gap fill play longer term. That's actually, it's, yeah. Oracle's going into earnings on the 12th. So the only thing is you got the potential double. It's not confirmed yet. 76.84 would be the confirming area. 78.55, 79.40 would be the two targets to utilize. Do not ignore it. And you have a gap magnet here right at the second target. This is a zone area, so I would this would definitely be the, I would structure reward to risk only using the first and second targets on this if it does trigger. To the downside, if it misses earnings and you have a key gap down, I'd be paying attention to 71.68, which is the 50% retracement harmonic from the up move and this key breakout zone. So that's your major support. Let me just peek at the weekly. There's nothing to do. Rotation zones are flat. So this would just be a short-term play. And it hasn't even triggered yet. And you didn't even get a buy signal off of this. The last buy signal was Yeah, it was this day. So it's still technically long. You're welcome, Amit. Is a trendline video one of those? I searched the channel and nothing came up. Let me see here. Let me just take a quick look. I thought I had a playlist up there too. I don't know why the links aren't working. They should be working. I'll have to look for it. Here, it's called trend lines. They're based off crypto, but it doesn't matter. I'm seeing they were published July 27th, 2017. Trend lines, TRENDLINES. I can't easily put the link in here because I'm in my, here you go. Could somebody, the video should work. Let me see. Let me just see. Yeah, the video works. Here,
forex.com.
I know you've signed up for Discord, Legion. I'm just
number one forex broker. The Fed is raising the interest rates, signaling trading opportunities in the U.S. dollar.
Who sets ads on these gosh darn videos, by the way? I'm putting it in the, where should I put this? I'm just putting it in the general section on the Discord server. The first one. There we go. It's in there, Legion, the first one. We need a stock trading scenario called Beauty and the Beast. It looks ugly, but you learn to love it. Hey, that's a good idea. Yeah, you can get Sterling's take on Z-Scaler too. I don't watch crap NBC, but thanks for that information. I'm going to have to wrap this up. When looking at retracements, a pullback to 50% level and a bounce there is a high probability continue of the trend. Yes. Anywhere between the 50 and the 62.5 is a trend continuation area. Close below the 62.5 is a trend reversal. You want Kroger? I love how it's the Kroger company. Again, Kroger had earnings today, beat, and just after completing, sorry, I never pulled that off. The long-term double, the next levels. That's one that should still see a longer-term rollover, but the short-term play is up. Next level I'd use is 53.57. Well, actually, let me amend that. A 53 to 53 is 57. Those are in 53 to 53, 57. Definitely at least for a stop raise after this breakout. See, again, what was this? Going into earnings? Well, ignore this bar. What was this? This was a potential double top. Did it trigger or confirm? No. So is it still a potential double top? No. It went the other way. So that's why you don't get married to potentiality. Then it went to the breakout area with your next target being 53 to 57. And if you want, this is a great way if you're trying to learn this stuff. Use your harmonics with the breakout area, and there you go. So on a breakout, stop raise, partial take profits, or at least another stop raise if you're still in massive bullish mode. That's how you use them. Little slight pause right by that first area, raise stops, and then just power move to your second one. That's why I use those levels. On your continued move up, since you don't have a pausing bar yet, you got to use your next target's area, which is this breakdown zone, or you could use a little end of here, so you could go a little in front of that 53 level, 52.75 to start either taking some more profits or unwinding. Well, I've gone a long time. Not gambling anymore. Good. I did it once when I started, but thanks to Mike, made the other half of that lost. Hey Mike, when is Bitcoin a rollover play? When we get another topping pattern. Bitcoin long term is another rollover play. You still have probabilities to the downside. My next targets, 21,870, 22,706. I'll watch for a rollover play in here. We get a close above 22,706. I'll start watching for a retest of the high areas, and that would generally be if the NASDAQ also kept in its power play mode. This is just like everything else today. We'll call it what, I hate that analogy, but the risk on. Risk on. Let's buy the crap. And I'm not necessarily, well, I am calling it crap because of the tether stuff. But it's the risk on because you also got the money pouring into the ARC kind of stuff. So would not be looking for it. There's no top pattern just yet. Yes. Thank you to Amit. Oh boy. What do you think about Intel? Do you want my long term or short term? Long term, I love Intel. Short term, until you're fighting against the sector trend. You're fighting against this. Why didn't that come up right? INTC. What did I put in INTL? You're fighting against the long-term trend. This has a great dividend yield. Okay, it's done its round trip move. It's got a fantastic dividend yield. So for a long term, you're fighting a key trend, but this is getting, yes, it can continue lower. It is in a major buy zone. So this is where it's to look on short-term pops for building stuff, but no issue trading around a longer-term position. Why? Because I love it fundamentally. Even now you have the semiconductors, which are going to weigh down. This can still go lower. So that's why I like to trade it around a core position. You also can harvest a dividend yield on there. It's severely beat up, but you're trying to still catch a falling knife. Does it have a major long-term bottoming pattern just yet? No. And when I say you're fighting the longer-term trend, your semiconductors. Now, once the semiconductors, especially start tagging the 200, and as long as this 179.56 level holds, that's where it's looking like more. It could be a more aggressive long-term play. Other than that, still watching for this play. Now, the nice thing is with Intel, you have that dividend. So if you're trying, and this is a great one, again, can't tell you specifically how to play it, but this is a great one. If you're trying to build a long-term position on rallies, especially back to the weekly rotation zone, is a great thing to potentially do covered calls. This is also a great one to do on drastic sell-offs like this. You get to sell some puts against it. So you have cash secured puts with the intention that if you're going to get assigned, you want to take delivery. And then you can roll covered calls against it on rallies. Because then you also are harvesting yield from the options and from your core position that you're maintaining. you can harvest your dividend yield. So that's going to help offset any further declines. Is that too specific or not specific enough, John? Tom is back. Maybe the top is near. BITO. Again, this is not one oh, ProShares Bitcoin strategy. I've never even looked at this. You do have a double bottom. You're trading against a trend. If Bitcoin gets above that 62.5, then that could be an interesting play long term. I'd be in bearish mode just like Bitcoin. Short term, that's the only thing. And by the way, you did get an aggressive buy on today's close. I don't follow this. I don't know if it's properly backed everything else. So I cannot talk about this from a structured fund point of view. You do have an aggressive buy. Why is it aggressive? Because you're looking for a short-term pop against the longer-term trend, which is down. That was actually a weekly buy. Your daily buy was yesterday. To the upside before that double triggers, if you're trying to play this to the upside for short-term, I'm not even going to put the gap harmonics on. I just want to see the full retracement harmonics because this is very gappy. But the key area I'd be targeting if you're already trying to play this alongside would be 1395 with the 50, and that's the 62.5 area. Your first area to raise a stop, if you were already long, I'd use 1346. Why? Not only is it the 50% of this decline, it's against this key resistance ledge. So got the daily aggressive buy yesterday, the follow through trade today. Again, these are counter trend, so you can't count as the more longer term buy. The only more long term buy would be above 1541, but that's still going against your weekly rotation zone. Now, if the weekly rotation zone eventually gets out of the way and that double is still in place, your probabilities rise up, and you notice the second target's coming in with this overall gap fill. There you go. Other than that, my overall bias still on cryptos is to the downside. I'm going to have to get through some of this other stuff on Sunday. Rich, if you can come back on Sunday, we can look at the pound US dollar. Thank you for taking care of your package. Greatly appreciate. You're welcome, Daniel. You are welcome, Legion. Did you get the link? I got your email. Did you get the link for the Discord server, Legion? You too, Amit. Again, thank you for the super chat. Thank you, Anissa. I did not look at end phase today. Did it? Well, that's not a big hit. That's just a pullback so far. And look, I mean, pullback level, and it still closed above key support. Remember, watch the closing basis. So that's a pullback so far. You got cycles, though, at the top finally looking to roll over. And you're overextended from the weekly rotation zone. So I'd be watching if this level breaks now next week, this 305.60, and you get a close below that, I'd be watching for the pullback to 276 to about 281 area. Oh, you're welcome, John. Great call on NVIDIA. Thank you for saving me money today on my calls. I was going to load up, and you assume it will fill the gap. You said 143.76 to 144.10. Look at the price action. You were right. Yeah, NVIDIA was nice today for that little short-term pop. Again, look at where that 60. Look at that 62.5 from your. Why use the gap harmonics on this? Because there's a bigger lesson there, but against that daily rotation zone, against that 62.5, boom, right there. So that was the little short-term play. Now next week, if we continue the stupid rally, then you could play more for the gap fill. But you are into the daily rotation zone, so I would not ignore your gap fill harmonics to play short-term options. Yeah, yes. Thank you, Dr. Michael, for shouting out Amit. Hey. So that's how I'd structure a long trade. Again, not trading advice, John, but that's how I look at Intel. Hello, Lauren, with the tardy slip. You have a great day too. See? See? Why isn't this channel more popular? Nvidia almost 100,000 gap calls expired worthless today because they didn't watch the path trading this morning. Exactly. People, what are they leaving money on the table? I hate that statement, by the way. I did. I thought I put it in. Oh, you're still on bingo, dark. That's it. Then I'm wrapping it up. Look, I can't even type it. Bingo. Are you hoping it calls out your name? I don't know what else I can say about this. It's not going to $9 anytime soon. Couldn't even rally today off of this massive rip your face off rally. That's not bullish. It's getting the cycle top, so I'd be wary of the next rollover play. And it couldn't rally today. Did it even fill this gap? If it couldn't even fill this gap, 258, 250. No, it didn't even fully fill the gap. I'd be wary of the next rollover play in this once the market rolls over. It didn't even get a decent rally. I don't have much to say. You're hoping for 9. You're going to need some rip your face off. It could even get a short squeeze today. You might still get a pump at some point. Again, this is nothing I trade because I can't stand this kind of price action, but you're in Hopeville. You're welcome, options 22. See you on Sunday, options 22. Again, I'm going to wrap this up. I've gone for like an hour and 10 minutes. So thank you everyone for attending. I got to take the 5 doggies out for a walk. I'll double check Legion. If I forgot the link, I'll resend it. Talk to everyone later. If you still don't get it in the next 5 minutes, email me back and I'll respond when I'm done walking the dogs. With that, I got to go. Bye for now.